All right, y'all. So welcome back to another video that I decided to chop down and prepare for you. In the first part of the video series, we focused on Vancouver, Canada, where we learned a little bit more about the real estate market. And of course, it was in a period of time. This was March 2018. Now with Nick, we're going to jump to Seattle, Washington, and we're going to actually end up learning and discovering what's happening in that particular market. And of course, I'm going to pause, do my own sort of feedback and review of what we talked about and my thinking behind what I'm seeing. So let's jump into the video.
I decided to jump across the border just a few short hours and come to Seattle, another booming real estate market. Hey, how's it going?
Hey, hi Nick, how are you?
Not bad,
Nice to meet you.
Nice
I'm Jana
to meet you.
with John L.
Thanks
Scott.
for meeting me here.
Thank you.
What neighborhood are we in?
Right now we're in the Admiral area of West Seattle.
Okay.
This is one of my personal favorite neighborhoods. You've got wide streets and vintage homes, walkable to parks, and California Avenue's not too far away. Alki's just down the street. So there's a great kind of revibrance happening in this area.
Is this your listing or
No,
is it?
this is not my listing.
I see.
This home just came on the market. It's actually a bank-owned property.
Okay.
And we were hoping to see it this morning before it sold, but the market's so crazy it actually sold before we got here.
It's sold already.
Would you like to see inside?
Yeah, that'd be great.
Let's check it out. So the home was built in 1907, and it's 1,170 square feet.
You said this is an investor deal?
Well, it'd be perfect for an investor because it's ready for some improvements.
It's got that great old home smell.
Yeah, doesn't it?
It does, yeah.
So in many markets, you would expect more for $500,000.
I know, right? Yeah, you walk in here and this is definitely like unrenovated, untouched for years.
Yeah.
Yeah.
It's ready for somebody to come in with some vision.
Yeah, seriously.
It'll be fun to see what somebody does to it.
You said 1907?
Built in 1907.
Yeah. That's very, very interesting layout.
Most of the homes built in the West Seattle area are what we call war boxes, built right after World War II. Most of the inventory in this area is, you don't have the features that this home offers. So a lot of people would flock to this home, and this area is particularly because this was an older neighborhood, and you have the craftsman style home and features that you don't get in those war boxes from the 1940s.
I see.
And then we could go up the Billy Goat stairs if you were really adventuresome.
I want to check it out. Let me just see what's up here.
You can see why we call them Billy Goat stairs.
And what, are these supposed to be bedrooms?
Yeah, they are. So anybody looking at this home would be curious about inspections, and I can tell you that most buyers in this market are waiving inspections.
Right.
So,
why is that?
Well, it's really difficult to make an inspection anything other than subjective. And so if you're working with a homeowner who's selling their home, they have 5 offers to choose from. They don't want to take one that's not solid and turn away those other 4 offers. And so in order to be competitive, you've just got to take the risk.
Yeah.
Okay, so first flag that went up was obviously the price of the property. As you saw, it is outdated. It is a bit on the smaller end, but not tiny. And the price is about $500,000 in an up and becoming neighborhood. So it's not like a neighborhood that is already up. It's a neighborhood that is poised to potentially grow. We don't know exactly what will happen with it. But the red flag for me that really stood out was foregoing inspection. Now, I understand why people are doing that. However, that is a dangerous and very risky proposition. Inspectors, while they can't go behind the walls and they can't open things up to give you exactly what's happening, having an inspection done is crucial to reducing the risk when you're about to put in a lot of money into a particular asset or a liability for that matter. So when people decide to forego inspections, they're opening themselves up to a huge risk. You don't know if foundation is good. You don't know what the costs are going to be once you take care of that ownership. But folks are doing it in the hope and desire to actually get the property. So that is flag number one for me. For me and my students, I always recommend do the inspection. If inspection is something that the seller is telling you, don't worry about it, be very, very worried and very cautious. My number one rule is I always do inspections before I purchase anything.
So Nick, thanks for joining me here in Columbia City. This is one of the hottest neighborhoods in Seattle right now. It's kind of going through a transitional phase.
Is this a market where there's end user buyers or investors or both?
Both, mostly end users. The traffic that is coming here, the buyers that are coming here are looking for easy access to transit. And of course, that's going to attract your investors too. But once again, we're working with escalating prices. That makes it hard for investors because the investors always have to have that profit.
I see.
Where we have a lot of home buyers who are just desperate to find a house to live.
And what are these things trading for?
Well, so this last home that we passed recently sold for $691.
Yep.
This one right here sold for $635.
Wow.
Very recently. We have another one that's recently sold for $505, and then the very last one sold for $700,000 on
This
the
is
street.
all within like the last year or something like that?
Yeah, all within the last 6 months.
Wow. And what was this market trading for like 5 years ago or 10 years ago?
You could have picked them up very inexpensively.
Like half price or?
Even less than that. This area
Wow.
is really, really skyrocketed. And last year, the median home price was $450 in this zip code, and today we're at over $560
Wow.
in just a year.
So red flag number two is the amount of appreciation that the market has seen in a short period of time. Again, we're seeing this in most of the what I like to call bubblicious markets, and that is the prices have gone out from about $450 to $560 on average. That is about 24-25% increase in 1 year. That is insane. In real estate, typical appreciation that you can expect is going to be about 3% on a low end to about 5 to 7% on a high end. So now you can understand completely that anything above that is very high appreciation. Now, it's pretty cool if you can get into it in that very moment. However, when you start getting in the top, now you're starting to approach the potential of the top of the market, which if it turns down is problematic for you. The other piece that she talked about in this particular segment was that the market was predominantly being run by homeowners who are looking for a place to live because they, for whatever reason, do not want to rent any longer. As investors, profitability is number one thing that we use. And so a lot of times investors will start pulling back. There's a reason for that. Vast majority of intelligent investors understand when market is at the top and when it doesn't make sense to get in. Homeowners, on the other hand, are just trying to find a place to live. So they will start buying even when it doesn't make sense in the hope that they will preserve what money they put in and potentially, hopefully, market won't turn down. Again, that is that sort of pray and hope mentality that a lot of people go into any type of investment with, and I do not recommend.
We have a supply and demand problem. So what I mean by supply problem is in King County, we have 1,500 homes as of January on the market. That's condominium, single family homes, that's everything. Do you remember me telling you 200 people are moving into Seattle a week? So we don't have enough homes for the people that are moving in, let alone for the people who are here trying to buy their first home.
Right.
So unless something changes with supply or demand, I don't see a change in the rising prices in the region.
And are developers, local developers, responding to this demand?
Well, they're certainly trying to, but the problem is there isn't a lot of opportunities to build big developments. So some builders are doing what we call infill. The challenge in a market like this is that developers will build to the highest percentage. I mean, that's where they're going to make their best profit. And if the demand meets it, they only need to serve the top 10% of the market, which is luxury homes.
Okay, so I'm done with red flags for a moment, and we're really talking about the reality. The part that I like about the market that I'm watching and hearing is that there's supply demand challenge. And there's more people coming in that there are properties on the market, which is good for the sellers and the developers. It's not so good for those that are looking to purchase. This is where we typically end up seeing the prices starting to rise, because as number of people want to get in and there's limited supply, the basic economics tells us that the prices will continue to rise. The problem that I am seeing and just watching in this particular video has to do a lot with developers. A lot of developers are not building affordable housing, and the reason for that is they can make way more money appealing to the higher end clientele, and that is exactly what the realtor is talking about here. They're going out there and building for the top 10%, sometimes top 1. And those are going to be what is known as Class A properties, where you get all these bells and whistles, everything is brand new, and it's going to require a top dollar to get in. But they're doing it because from profitability standpoint, it makes way more sense for them. The unfortunate piece is that for the common folk who are looking just for a place to live, they can't find anything out there. They can't afford what is available. And so they end up moving further away, potentially moving in with roommates, potentially renting and finding multiple people that they can rent the space with. And we see this in places like New York City, Boston, San Francisco, LA, London, all over the world, in major metropolis, where people are moving in for job reasons, but those jobs don't pay enough for them to acquire property on their own, whether it is to rent or to buy. So that is one of the sort of positive, if you can find a positive in this whole story, that would be one positive thing about this market.
This is a 2-bedroom, 2-bath, 1,100 square foot condo that they built so that people coming in and buying in a pre-sale can see actually what the product's going to look like once it's done. What you see out here through the windows is what the view will be like, and this is about the 30th floor. So it's pretty accurate to give you an idea of what your orientation is.
I see. And what do you think a property or a unit like this in this building is going to sell for?
For what's remaining, this unit is going at about $1,399,000.
Okay.
It's just under 1,100 square feet, so.
And what would a unit like this in today's market rent for?
Oh my gosh. Units in the downtown market are averaging about $350 to $450 a square foot. And so a unit like this would probably be about $3,800 to $4,000 a month.
And would that be enough to cover the mortgage?
Hopefully.
All right.
So here we go, looking at the condos again. Remember from the previous videos, condos end up being very popular when the market is pretty darn expensive. So condos are popular in Seattle. And again, that reminds me of that 2004, 2005, when I lived in Atlanta, Georgia, when condos were just going bonanza crazy. So here's the thing that is kind of interesting if you picked up on it. And if you haven't, I'm going to break it down for you. It's an 1,100 square foot condo that is selling for nearly $1.4 million. That's $1,300 a square foot, but it only rents for about $350 to $450 a square foot. Obviously, the math doesn't make sense. And when Nick asked, is rent going to cover mortgage? And she was like, hopefully. I can tell you it will not. It will absolutely not cover the mortgage. And so from the investor standpoint, investor that is looking at passive income, this deal will simply not work for you, at least not from the moment you buy. And if you know anything about things that I teach, things have to make sense from the moment you buy and not something 10, 15, 20 years from now, or potentially never.
So one of the things I saw in Vancouver was this activity where people were sort of speculating on pre-sales. Mm-hmm. So one individual would buy into a condo pre-sale and then flip it to another one. Uh-huh. Is that happening up here?
It does, yes. Because you're buying at, say, today's price, 2018, 2017 price, and in 2 years, what we're seeing is 14% gains in our market year over year. So absolutely. We'll see a ton of resales once the project is complete.
I see. And are these resales happening after construction is complete, or are they happening in between?
No, they'll happen after it's complete.
Okay, so they're not doing this assigning contracts and stuff like that?
No, the contracts aren't written that way. But right now, because there is no inventory, we're seeing just a frenzy on every single property.
So the part that is different about Seattle, as you can see in the video, is that these pre-sales are not being flipped before the deal is done. And that is predominantly due to regulations and the ways that contracts are written. Vast majority of contracts within the United States do not allow for assignment of the contract, although those still do exist to a degree. However, it appears that Seattle is not participating in that because that was one of those things that was really risky in the 2006, 7, 8, right before the market crashed. So folks are trying to protect themselves by not allowing for the assignment of the contract on single families. Within multifamily components, when we're talking apartment buildings of 50, 100, 200 units and plus, those things and those deals still do exist and you're able to participate in them. How much that is prevalent, I really wouldn't be able to tell you exactly. However, I know that that is happening. So that is one of the things that is kind of beneficial. And you saw that they're talking about 19% year over year appreciation. And we just calculated that in that one market, part of the Seattle that she talked about, the appreciation was 25%. So basically, if you buy it for $1 million, you can sell it in about a year, 2 years for $1.25, $1.5, $1.6 million. And those are ridiculous gains. And of course, if the market keeps going up, that's amazing. And it's a great way to make some money. But the problem again comes in, what if the market does not go up? Again, there's that risk if you are thinking of flipping some of these deals.
So it's been a very healthy apartment market. Condominiums have been grossly underrepresented. We are experiencing lineups around the block when we have offerings of new developments. There's a real supply and demand imbalance here in downtown Seattle. Condominium owners are condominium prospects are very eager for new inventory, and there's just a real lack of them. So the last couple of projects, including the one we're in here called Nexus, as well as one we just recently launched called Coda, drew lineups and even overnight campers to position themselves for first reservations.
Again, you're hearing it yet all over again that the condos are the hot thing and people are literally lining up around the block, spending a night. Almost reminds me of that Black Friday stuff when people sleep the night prior before the store opens in the hope they can go in and grab a great deal. What scares me about watching this stuff is the ability or inability of folks to get into stuff. And I am very worried about folks who are getting in at this very top of the market, because none of us know when the market will turn. One thing I do know for certain is nothing keeps going up for forever, and things will slow down, things will drop. I just don't know when. And so for me, this is a really risky proposition, and I am very worried about individuals who are right now participating in what's happening in the market.
In your day-to-day, do you come across people who are trying to make investments or speculate around
Absolutely.
town? And what is the profile of the typical group or person doing that?
Well, there's a couple of different profiles. We're seeing quite a huge influx of Chinese buyers coming in, and they'll come in sight unseen, they'll buy a property, all cash, and they're basically buying it as a holding. And what I mean by that is they've got younger children and they want a good education for their children. So their children might be, 7, 8, 9, 10, and they're going to hold it for about 10 years until that child is ready for college. And then they'll bring them here for college.
So that's more of like not a flip strategy, but...
Not a flip strategy, but definitely an investment strategy.
Investment strategy.
Now, on the flip strategies, we see people purchasing homes that need to be remodeled. So they'll go in, buy them pretty much at a lower price, and go in and just give it a facelift. And what I mean by that is new kitchens, new baths, new flooring, new paint. They'll basically flip it for about double what they paid for it.
I came across some articles talking about this phenomenon where buyers were increasingly coming to the table with sort of all cash, non-contingent offers immediately. Are you seeing that up here?
Yes, cash is always king. What we're finding in our multiple offer situation is people waive everything. They waive inspection, they waive title, they waive finance. They'll still include a finance addendum if they're getting a loan on it, but they waive everything. They waive the appraisal. They waive everything. Wow. I mean, they come in with absolutely no outs.
So people are having to come to the table with a non-contingent offer on day one. No ifs, ands, or buts about it.
Absolutely.
And is that happening all across the city, all over the place?
Pretty much, yeah.
And when did that start happening?
That started happening about probably a good 10, 12 months ago.
And what do you think about that?
It's great for the sellers. It's definitely a seller's market. I've had one purchaser, or one buyer, I should say, that I've worked with for the last 3 months, and they're a previous client. And we've made 8 different offers. And we're not all cash. We've got a strong down payment, 20%. We go in and we waive everything, and we're still not getting it.
So do you think there's a bubble up here in Seattle?
I do. And that's just my personal opinion, but we just keep thinking it can't keep going like this. The prices just keep increasing, and we've seen it before, but I just keep wondering if we can keep sustaining this.
Okay, so you really got to hear and see of what the realtor is talking about, that people are waiving everything. We've already talked about waiving of the inspection. Let's talk about the waiving of the title and other pieces. Waiving of the title search and title protection and insurance basically ensures that when you buy that property, it is legally yours. There's nobody else that can claim that deed, that ownership of the property except for you. What we are seeing right now in Seattle, or at least in the March of 2018 when this was being recorded, was that people are waiving that. So they are willing to risk, huge risk, that they're going to quote unquote own something that might not even be theirs at the end of the whole thing. That is highly problematic and a huge risk that I never recommend to anybody. You've also seen that a lot of people who are buying, as far as the investors, are going to be flippers who are just going to patch some walls, maybe paint, maybe put in the new kitchen's walls, and then be able to double their money. And so for me, that's a pretty nifty strategy and pretty cool. And that's why people are doing it. However, the problem again comes in of when you get in, you don't know if 6 months or 12 months, by the time the project is done, that strategy is going to work for you, whether the market will sustain it. And you will see that even the realtor is talking about the fact that there is a potential bubble within Seattle, and people are really watching Seattle closely because it potentially could be the one to turn. Now, I do want to mention one of the things, and this is my personal opinion. I don't know that the next crash will come from real estate. I believe that the next crash will come from debt. It will come from bonds, that fixed income thing that many people are looking at and speculating in. And when that fixed income thing comes in, it sort of triggers everything. It will trigger the stock market, it will trigger the employment, it will trigger the jobs. And when those things are triggered, it will also start triggering everything else financially health. So for me, and one strategy that I absolutely love is that flip it online strategy, or the real estate on the street cheap strategy. I can't even talk right now. Because we're talking about tax deeds, and here's some of the really cool things that we have been able to find in King County, Washington. There are properties that are out there that are being available for sale. Now, there's not a huge amount of them, and there's a bit of competition happening right now in the county, but you can still find properties that are valued, assessed value, anywhere between $300,000 to about $700,000, $100,000, that's assessed value. Market value, they will probably fetch anywhere between 1.2 to 1.7 million that you can buy for as little as $50 to maybe $150,000. While that may seem steep to a degree, that's a bargain if you pay attention to what's happening within the marketplace. So you can go in, buy a $100,000 property, put another $100,000 in it, you are in maybe $200,000, and you can flip it, relatively speaking, easily for about $1.6 million. That is a huge gain, and that is why I'm such a proponent of Real Estate on the Cheap Challenge and Flip It Online Masterclass. So yes, I am pitching it to you right now in case you're wondering what I'm doing, why I'm talking about it, because this strategy is such an amazing strategy within this particular market, because you can get into properties for dirt cheap, actually less than dirt, because some of the teardowns are being sold for $500,000 to $1 million because market is demanding it right now. So if you are buying this traditionally, please do be very, very cautious. I am very worried about what's happening in the market just by watching and listening to the report that we are watching here.
I'm back home now and about to sit down with legendary real estate consultant John Burns to discuss with him what I saw up in Seattle and Vancouver.
So you picked a couple of doozies. Seattle's had the most price appreciation in this cycle by far. What's going on in Seattle is real job growth by real companies that are making a lot of money, with Amazon and Microsoft really leading the way. And the consumer there is very exuberant, like home prices can only go up. And I believe Seattle is a permanently more expensive place to live because the game has been changed there, particularly by Amazon. What I struggle with is just how much more. Is it permanently 10% more or 20% more? And that's a really tough decision. Well, what we're doing in markets like that is we're monitoring job growth really carefully, because I think that's how the game ends. It's not due to rising interest rates or anything along those lines. It's due to a recession. And the more overpriced a market is going into recession, or the more overbuilt a market is going into recession, the harder the recession is.
Okay, so you got to hear from John Burns, CEO of John Burns Real Estate Consulting, where he talks about a couple of doozies. And I picked them for a reason, just like Nick did, most likely. Nick is the guy who is the investor and who has been our guide, so to speak, throughout this video. And yeah, I picked them for a reason because there are things happening in the market that are huge lessons that we can all learn from. And as you will see, John Burns also likes to say that, yeah, Seattle does have some good job growth happening, mostly because of the high-tech companies like Amazon and Microsoft. And there's some of the other ones that have been growing out there and developing in the market. And right now the market is growing, and watching of the job growth is crucially important within this market. Again, I am worried about the recession that is coming our way, and potentially not just a recession or correction, but a full-blown depression that might last for a few years, if not even a decade. And I am worried about that. And when I go into investing stuff, I do think about the global component. I do think about my money. I do think about my holdings and my investment strategies, and sort of what are the things that are important to have. You have heard that cash is king, and I still do agree with that statement. Cash still very much is king. And as much as inflation has been going up, and there are different places where you can research about what true inflation is, I do believe that we are entering a world of deflation, meaning where the value of money keeps going up. And that is mostly because of the population. We are mostly aging right now. There's not a whole lot of people in my generation. Millennials and Generation Z that are coming after me are the ones who are bigger. However, they're still very young, and so they're not productive members of the society quite yet. And so I do worry about those things, and I worry about folks who are jumping in the market. For me, the safest investment to go in still very much is real estate, but not being purchased in a traditional way through the market prices. For me, I do prefer to go into it through tax foreclosures, because if I'm going to waive the inspection, the title, the whole 9 yards, and not know a lot of things and buy sight unseen, I'd rather pay 10% on the value, market value, than pay the full-blown thing, or even 20% higher, which is what I'm seeing happening within these markets. So if you're going out there, please do be careful, do be cautious. I hope that this was really helpful to you to be able to learn something and really watch what's happening to educate yourself. The number one things that you can do right now is education. Learn how to get into the tax foreclosures, because these are going to be on the rise in upcoming years. Learn how to maneuver and manipulate your money, how finance works. Make sure you do have cash. Make sure you do get some what is called as third-party risk-less investments. And for me, that's insurance, and those are precious metals. So do make sure that you position yourself well for what is about to come our way. And those that position themselves well right now will be huge benefactors of things that will come our way. We do see on the macroeconomic scale that things will start to go down. It will sort of level off, and then it will start taking off. What we want to do is make sure that we start getting in when we're leveling off and when we're starting to position on up. Right now, there are places where are very much at the top, and so you don't want to be there, because the only place to go is down. It's like a roller coaster. Everything is cyclical. So if you catch it slightly down when it's bottoming and when it starts to go up, this right here, that lower sort of the cup formation, the V formation, is where you want to be. You want to be down in this area, because when that next tide wave goes up, it will take you right along with it. So be smart, be careful, and until next time, stay forever money blessed. And do remember, you are only one deal away.